Hi, this is Tim with BIS Commodities. Just taking a look at the week in review. Let's just start out and see where we're closing for the week. We'll start with corn. Corn closed 3 cents lower in the March contract, 347 and a half. Beans, the bigger loser on the week, down 22 and a half cents, just a hair over 967. And the January contract is where we've seen the settlement price today. March wheat was down just under a penny for the week, actually, at 418 and a quarter. And again, that's in the March contract. Taking a look at the livestock market, December cattle closed at 118.90, or the settled price this week in the December contract. That's up $2.62. February hogs closed just shy of 90 cents up on the week at 68.52. The dollar's a little bit higher as of this time, still trading right around the 93.40 area, and crude looks like it's trading fairly steady on the week as well. The January contract is right around 57.30, the last count. Taking a look at the corn and soybean futures for the week, corn very narrow trading range, only a 5.5 cent range this week. Beans a little bit more of a range, 25 cents. Unfortunately, 22 of that was to the downside from last week. Not a lot of information out this week, but we did see some pressure on the beans. Came from probably a couple things. One was South America weather. We're seeing some forecasted rains coming into play. We're expecting rains over the weekend into next week. We'll see if those fall as predicted, and particularly it's Argentina. There is not a weather problem as we are aware of right now in Brazil, but there are concerns about a little bit of dryness in Argentina, but these rains are supposed to quench that. The other item this week was we did have our monthly supply and demand report. This is a report that leaves the supply or the production numbers alone and then just focuses on the demand. And the trade was looking for a little bit of a decrease in exports, and we did get that. In fact, we got a 25 million decrease in export expectations from the USDA. They did increase demand 5,000 bushels of seed, which is somewhat interesting, but all said and done, that ended up adding another 20 million bushels to the bottom. The carryout, giving us a carryout number of 445 million bushels. Again, that's up 20 from last month, a little bit more than what the trade expected. We've seen some pressure on beans with that, and again, precip forecast in Argentina. Corn, very steady. Lethargic range-bound trade. Unfortunately, we did make new lows in the March contract and closed down here right at those lows for the most part, below 350 in the March. The supply and demand report was uneventful. We were expecting maybe a little bit of an increase in demand on ethanol. We did get a 50 million bushel increase on ethanol demand, so that did lower our carryout a bit. We're still sitting here at a 2.4 billion bushel carryout on corn, so there isn't any concerns there as far as a near-term and or a long-term needs at this point. So as we take a look forward at this market, particularly into next week, we did see a very lethargic trade in corn this week, grinding lower in nature. Wheat as well. Probably not seeing anything different next week in here. And the most likely for beans as well. We're probably going to see how the weather forecasts over the weekend turns out in Argentina. That would be the something that could cause a reaction in the soybean futures. Corn still looks fairly ugly and steady. The other thing here is, though, we are seeing the managed funds holding a very large short position, both corn and wheat, and we did see wheat grind lower as well. And upon the release of this video, we haven't seen the Commitment of Traders report this week, but the thought is we're probably seeing beans scaled back most of their length as well, and possibly short. So we are heavily sold here on the, as far as the managed money is concerned. The question moving forward is what is going to cause them to cover their shorts. End users are probably going to be very patient down in here at this point. As far as coverage, basis will probably be the biggest play for them. We are seeing basis firming up here locally in Cedar Rapids, or holding firm at 10 under at this point for corn. Moving on to the livestock market, cattle. Stronger cash this week. We did see boxes more or less mixed for the most part this week. Some late trade occurring today up to 119 in areas, and we've seen the futures rally off that. And most of that gain, and I mentioned we were up over $2 in the December contract today, that all came today basically. So the stronger cash pulled the D's futures up. Taking a look into next week and the following week, again shortened trade weeks, there is a seasonality to see some strength in the December cattle futures, so that may follow through here. We're going to see, we may get a little bit more stronger. We're going to get some more cash trade after the release of this video this week as well, possibly into Saturday. We'll see. Maybe that'll bode well. Maybe we can get a little bit more of a strength into the futures contract next week. Hogs been futures been pretty volatile. We've seen the cutout fall off significantly midweek. We've seen bellies down $26 in 2 days. Loins were down as well. We've seen a sell-off hard, but then we did see a hard reversal, outside day up in the first couple futures contract months, and on Thursday, and maybe we're trying to find a bottom in here as far as cash is concerned. We know weights are still up there, the numbers are still there. But we did find some support on the charts right here in this area, so that may be the thing to keep an eye on. It was an inside day following yesterday's outside day on the front months of the hog futures, so cash still feels like it's going to be the determinant moving forward. And again, we are seeing the hogs weights increasing, so it still feels as if rallies are to be sold, especially in some of these summer months. We do get a monthly, or excuse me, we get our hog and pig report next Friday. We probably see some squaring going into that. Again, things to take a look at for next week. Not much on a shortened holiday week, but keep an eye on the cash trade. It feels like it's going to be the driver for both cattle and hogs. And weather is probably the main determinant for the grain markets. So any questions, please feel free to give us a call here at BIS Commodities at 1-800-373-2525.